Hey everybody, this is Dawn Johnson with Back Stage Realty, and today I am coming to you to give you a little bit of information on how to use the net sheet that is in your Dropbox to be able to calculate your client's closing costs, whether that be the buyer or the seller. So I am going to do a share screen with you, and we're going to go through the net sheet so I can show you how to input all the information in there. And we are going to use as an example Chris's property at 17 Ardmore Court here in Niceville. So we're going to just use that as our fictitious property that we're calculating closing costs on. So if you have any questions, just let me know. And let's see, let's go ahead and share this screen with you. And we are going to start right in here. So hopefully you can see everything that is on the screen right now. I am in Charlotte's Dropbox account. So I have access to all of your Dropbox accounts, and I'm going to do another Zoom meeting on how we're going to move forward with the Dropbox accounts, my new agents. This is all you see when you log into your Backstage Realty Dropbox account. So these are the files that you have. Every agent has this, and we're moving towards this. So what we want to do here is we've got a little bit of information in here. To get to our net sheet, we're going to go to Forms. We're going to go to General Forms because it's used for the buyer and the seller. You'll see that there's two here. There's a very good reason for this net sheet. The first thing that you're going to want to do is you're going to want to save this net sheet somewhere. But sometimes we get excited when we're working with a new client, and perhaps we don't save it into the transaction, and then we have a whole bunch of information that is pre-populated into our spreadsheet. So you can always go back here and you've got a backup copy of it. So this is a clean copy with nothing changed. So, you know, if you get excited and you start populating this one and accidentally save it as your primary net sheet, you can go back to this backup copy and then save it as the net sheet. I'm hoping that you guys can see this. So let me make sure that you're seeing the correct screen. Okay, let's switch over to this one. We're going to enable this content and we're going to continue. So this is what our net sheet looks like. This is what the finished product looks like. But first we've got to input a bunch of information in here. Let's make sure that we're sharing this. Yep, okay. So now we're going to go in here and we're going to put in the information. So our seller in this particular case is a Mr. Edwards, and we're going to call the buyer. So we're just going to click through these. The next is going to be, oh, see, I've already done it. I'm excited. So I did not. I'm going to take this and I'm going to go to File, and I'm going to do a Save As. And I'm going to do this as my buyer's net sheet. And then I am going to browse for a place. So I am going back to Charlotte's Forms, and we're going to say we're doing this for a buyer. So we're going into Sales and Buyers, and we're going to create a new folder called Sample Buyer. We're going to open that up, that new folder that we created. So now you can see Sample Buyer, my buyer's net sheet. We're going to save that, and now we can put in our information and save it. And you can actually see up here it says my buyer's net sheet, so I know that this is saved and not the original copy. The buyers are going to be Mr. Buyer, and the street address on this one is 17 Ardmore Court, and that is Niceville, Florida. You don't have to put this information in, but when you save it and then you're looking at this net sheet versus other net sheets that you might do on other properties for them. It's very helpful to have that information. So we're preparing an offer. We're going to say that they are going to close on, let's say, May 15th in 2020. And they are going to make a full price offer because they love the house. Last year's taxes. So we're going to go back to this form here. Now you can either pull it up on the tax roll, but most of the time it's going to be right down here in this middle section here, and it says right here that the last taxes were $2,019, and that those were from 2019. So that's the last tax year. So we're going to populate that in here. That's how we get that information. We don't know anything about estimated repairs or other. We're representing the buyer, so we don't really need to fill in too much here on the seller's information, but we do need to put the earnest money deposit for the buyer. So let's say that we have a conventional, we're going to go with a conventional buyer. And this conventional buyer is putting a standard 20% down, and they are doing kind of the standard in the conventional market is a 1% earnest money deposit. And so we're going to do a $3,690 earnest money deposit. There is no HOA transfer fee or monthly fee. The HOA in Norwich Village is voluntary. It's $100 a year. So we don't have to put that information. Now, if we did have an HOA or a condo and there were fees, we would break that up so that that would add that into the payment when we get to the next step. So he's going to do conventional. And so the loan amount is going to be 80% of the 369 times 80%. This is going to be 295,200, and that's just the standard calculator, regular math. All right, we're going to say that the interest rate on his loan is 3.75%. And he's going to pay it over 30 years. There's no VA funding fee, so we don't have to put anything in there. Okay, so that gets us down. His principal and interest is $1,367, but that's not the cool part. So we're going to go down here. These are pre-populated to save in the manner in which the contract delegates them. So the survey, the contract says that the buyer pays for the survey. Keep in mind that if it's not lot and block, the survey could cost more, especially if you're dealing with agricultural or acreage or commercial. Termite inspection. Now, if he were doing VA, he wouldn't be allowed to pay that. It's part of the VA addendum that says that the seller will pay it. The deed doc stamps are on the seller. That's a tax on selling your property. So that's paid for by the seller. Loan origination charges, if there's loan origination charges. Title insurance. Now, title insurance, the contract says, can go either way. This actually has both the owners and the lender's insurance in here, and that's because the secondary policy is just a rider, and it's usually just a couple $100. So I have these grouped together, and it creates a little bit of a cushion for you. So the title insurance is grouped together. In this particular case, my buyer is really gung-ho on this property. They want to pay for the title insurance. The closing fee, that's typically paid for by the seller, but you do want to check with your title company. Some title companies, this is not outlined in the contract. So they have a settlement fee that they charge. Sometimes most of the time they charge it to the seller. But sometimes they have a settlement fee that they charge to the seller and one that they charge to the buyer. So make sure that you're aware and that you talk to your title company and find out about that. So the deed recording fee, this is to record the new deed, and it's usually about $20. It's just a small recording fee. If there was an HOA transfer fee or monthly fee, we would put that in here. Broker's fee, we don't care about. Seller is paying for the home warranty. The buyer is paying for their own appraisal. They're paying their own loan origination fees and their own loan discount points. Now, this loan origination fee, you need to get with your lender. This is where having good, clear communication with your buyer is very important. So loan origination fees around here range from $800 to $1,200, but there are some big companies, including Eglin Federal Credit Union and USAA, that charge a 1% um, origination fee. So that's just the fee for purchasing the loan or originating the loan with them. So in this particular case, we're going to estimate on the high end. You always want to estimate high. If you're going to surprise your client at the closing table, I would rather you surprise them with not having to bring as much money or getting more money than surprise them with a negative surprise. So VA funding fee, if he were a VA buyer, that would go on him, and that's rolled into it. The mortgage intangible tax, the mortgage doc stamps, and the mortgage recording fees are all things that the contract says that the buyer pays for. Everything's negotiable, but I'll show you how to manage that in just a minute. The home inspection fee, this is actually something they're going to pay for beforehand, but we're trying to look at the total closing costs. So credit report, flood certification, homeowner's insurance quote. Now this bases off of so many dollars per 100,000. And so this is just an estimate. If you knew that this particular property, say the insurance was $1,572, you could put that in there. Whatever you put into this override section over here it will override these. Do not change. You see these categories right here, do not change them. Do not touch these numbers. They are pre-populated for a reason. So if you're going to override something, do it over here. And if the box is red, that means that you have selected the other person to pay for it. So like if I were to change this to seller, you notice the box moves. So, and it moves that fee over to the other side from buyer to seller. And then you can move it back again. So just be mindful of that. And anything that you put in here is going to override the total fee. So if you know the loan origination fee, if you know the home insurance quote, whatever the case may be, you can put that in there. So now we're going to take that information, we're going to go over here to the buyer's closing costs. And it says Mr. Buyer is buying 17 Ardmore Court for Niceville, Florida. He wants to close by 15/20 for $369,000. He's going to take a loan out of $295,200. He is paying for his termite inspection. He is paying for his survey. He is paying for his title insurance. He is paying for his deed recording fee, his appraisal, his loan origination fee, his mortgage intangible, mortgage stock, mortgage recording, his home inspection fee, his credit report, and his flood certification. Now, some of this stuff may get paid for in advance. If so, that's great, and that's not a problem. So his total estimated closing costs are $7,710.60. And his estimated prepaids, this is interest from the date of closing to the end of the month, and then they'll skip a month in payments. So if we were closing May 15th, he wouldn't have a payment June 1st. His first payment would be July 1st. So he's going to pay interest from the May 15th to the end of the month. So that's 16 days. And his interest at $375 on what he's borrowing is $30.33 a day. And that's how they come up with that figure. We said the insurance was $1,572 a month. They're going to take a full year of that. Plus, they take about another additional 3 months that they're going to set up his escrow account with. So 3 months of his homeowner's insurance would come out to $393. He doesn't have to deal with private mortgage insurance because he put 20% down. And then you're also going to escrow taxes. You're going to escrow 3 months of taxes, and his taxes come out to about $168.25 per month. So he has $504 there. So his prepaids are $2,955.01. His closing costs are $7,710.60. So his total estimate of settlement costs are $10,665.61. And then how this all shakes loose is here's the purchase price of the house. Here are all of his settlement costs plus his prepaids. This is how much he's borrowing, and this is how much he put down when he initiated the contract. So this is the amount he would need to bring to the closing table. And then his first principal and interest on his first loan, $1,367. And then the homeowner's insurance, remember, $1,572 divided by 12, that's $131 a month. And his property taxes, we remember from up here, were $168.25. So his total monthly payment is going to be $1,666.37. Now, you ask, what if the seller doesn't have, say they have the 20%, but they don't have the additional money for closing costs and prepaid items? And this happens often. I'm still going to put everything in the way that the contract states it, with the difference of, say they don't have any money, I may go ahead and move this title insurance, and we'll check the box that says the seller pays for it. So we're going to move the title insurance from the buyer, we're going to move that to the seller. And then we're going to look at what those total closing costs would be now. So now he owes $7,713. So what we would do is we would take that and we would put it into the contract. If they had no money but the 20% to put down, what we would do is we would ask for a seller concession in paragraph 20 of no more than $8,000 towards buyer's closing costs. And that's a pretty normal looking concession. So, and that's how that would play out. And so this would actually be $7,700 less. So he'd be bringing just over $70,000 to the closing table after his earnest money deposit. And of course, his payment stays the same. That doesn't change that. But this gives us an idea. This is the first thing that we want to do, because whether your buyer has money for closing costs or they don't, before you can actually start negotiating what those closing costs are going to be, you want to be able to say, here's what the standard contract looks like. This is how much, if we just wrote it exactly the way that the contract says, with the exception of, like I said, title insurance, it's box. You check either the buyer's paying for it or the seller's paying for it. So other than that, all of these things it says in the contract, the buyer is going to pay for in just a regular standard contract. So we want to make sure that they're comfortable with whatever this figure is. And the best way to do that, I ask them, I take this and I show it to them and I say, okay, per the standard contract, your closing costs and your prepaids for homeowners insurance and your tax account for your escrows is going to be about $7,700. How much did you budget for it? Are we going to ask for seller concessions? And they go, oh, well, I've only got $5,000. So then I know that I can ask for up to $3,000 worth of seller concessions, and that's going to get that number down below $5,000. Now, if they say that they've only got $5,000 total, then we have a problem, because this is a loan that's showing that they're going to come out of pocket about $75,000. So just keep that in mind, and happy hunting, and go sell something. Thanks, guys.